Trade Genius.
All right, guys, let's dive right into the Bitcoin charts. Just basically an update from our last video. Now, if you recall, what we were looking at as a red flag is our stochastics crossing over. You'll notice they crossed over here a few bars back, and we've since rolled over into what is really support. But notice we had a crossover here that led to new lows, a crossover here, which ultimately led to a flush lower, a crossover here, which led to a nice dip down into support. And that's essentially what we have here, is a dip down into support. So it remains to be seen if we dip lower. What you're going to find out as we get through this video is it's really going to look like Bitcoin's going to get into a low volatility range, and we need to be mentally prepared for that. Now, it doesn't mean that you can't trade it or there's going to be a lack of trading. There's always going to be a range to trade, but you just need to kind of frame things based on what we're seeing both in the technicals and then also our long-term views. So we'll cover all that as we get forward and go forward in this video. So this is back into support, and right now, if you drill down to a lower time frame, there's a lot of calls for this to flush lower, but in reality, what we're seeing is a simple trade setup where we're in the low end of this range again. And we have a moneymaker buy that fires here. The stochastics are in buy territory, and your risk reward trade here this week is buying. Your stop's going to be pretty tight here, so risk reward is good. And you're going to be looking at these upper levels here, 7,500 to 6,500. Now, if we go to the Delta chart, Delta is really just not showing us much. If we're trending, this is where I look to get a green light to buy dips or sell rips. And right now we are chopping between, going long and going short, largely because the delta has just kind of been flat along with price action. So things are starting to flatten out, and a big and your big obvious flag for that going sideways is the WMA65 here, just really getting flat. So I think we're just going to see a lot of flip-flopping until we get a decent trend going. But I think that might be hard to come by as we move forward. Short term, what I see now, this is really short term stuff, but we see the negative funding now here on BitMEX, and typically what that will indicate is we'll probably get some sort of spike up. You also notice the volatility is below the 1.9 level, and when we get that, you typically will see a move like you see the scam wick that happened here, and coming out of that volatility. So probably going to see that, and as long as the funding stays this negative print, you'll get basically the probabilities of it breaking the resistance here goes up. And initially you're probably going to see you can see an easy wick up to the 7,300. But if we're going forward, we look at levels that make sense. Again, this is our gap chart. This is the CME gap chart, and you look at the midpoints of the gaps because price likes to react off of those. Like I said, it's come off, it's reacted off of this one here at 71.30, and then we start looking at the next ones up, which is 75.29 and about 76.60 or so. And so those seem to be logical targets for me, being in a range bound type environment that we would take profit targets. But first, it's got to really clear that 7,300. So that's short-term stuff, looking at what we could expect this week, and this could be within the next 24 hours. We see an impulse higher based on the negative funding rate. If we look at the futures chart, expiration chart, each line is our futures expiration, and we talked about how this last one, as we were coming up into it, we bounced early, and we could expect a rollover, which is what happened there, because we just tend to pivot off these expirations, and that's all that is. It's just a pivot. And what's been happening lately is we kind of go choppy for the first half of the month, and so like you see here, we kind of ranged, did a false breakout higher, then back into the range, and then we dumped again back into the expiration. So these post-expiration moves, once they're done, they largely get a little range bound. And then toward the back half of the month, we've been seeing moves to the downside. So it'll be interesting to see what the back half of this month gives us. But essentially the first 2 weeks of the month have been somewhat range bound. This obviously came out of the range in the second week of the month, but quickly retraced. So that would be a heads up that we might have some change of character if we saw this break above for this outlook here, 7,600, if you were to break above 7,600 and then 7,600 turn into support, that's a change of character. We might get a move higher. But right now, first couple weeks of the months usually are stuck in this range. So if we go by the last few post expirations, we would actually be bearish into a possible dip lower, taking out or testing some of these lower wicks here. So just keep an eye on that. 7,600 turns into support, then we've got a change in structure. We may start rotating higher into the end of the month. Here's another one that I like to look at as far as levels go, and this is the Bitcoin log growth curve. And this is an indicator you can get on TradingView. Just look it up. And the levels in play here, the current level is 77.53. Okay, we just really haven't been able to close above that log growth curve there. And then basically the big time support, where I really expect price not to get below, currently sits at 63.89. I think this holds going forward as we get through the end of the year and toward halving. Speaking of the halving and all that stuff, we're back to par as far as price goes in terms of where we are in halving. But if we zoom in on this, right, and we look as we head toward the closer toward halving, right? May 2020 is the halving. But look at what, if we're now back on par and we're going to follow the cycle, look at what price, it's going to stay range bound between low 6,000s and 7,000. And then as we get toward the halving, we start making that move, according to this cycle graph, it would be post halving, which sometimes happens. You get a peak post halving versus pre halving, and then it pulls back a bit. But this would drive a lot of people crazy because nobody really in the market, guys, if you think about it, what's out there, no one's saying we're going to be chopping until halving May. Okay, that's not really a scenario people are talking about, and therefore I think has a high probability of being a scenario, because usually what people aren't looking at is what plays out. So I think it's good to be mentally prepared for this type of price action. Now, obviously, every week we'll check and see how we are comparing to this. But unless there's some external circumstance that pops up, maybe geopolitically or something like that, this is what we would expect to see based on our previous halving cycles. So not the end of the world. It's actually pretty healthy to consolidate like that. I mean, I know it's really boring for months on end to be in a range like that, but you just have to adapt. Especially if you're swing trading this stuff, just adapt to the smaller ranges. I mean, you still can really add things up. If you adapt to that, just know you're gonna have smaller ranges and take those smaller profit targets. Here's a chart that I wanted to show you. We're gonna actually touch on this indicator later in the week on a future video. We'll do this either Thursday or Friday. But essentially what this does is it really does a good job of normalizing what Bitcoin price is, and then taking, it's a proprietary mathematical calculation on basically an average, creates kind of a moving average, but it does a good job of normalizing the peaks or when the market's overbought and oversold. So obviously overbought turns red, and that's time to get out of your long-term positions. And it's done a good job of that on the last couple of post-halving peaks, as well as the post-halving bottoms. And what you'll notice, there's these shaded areas, which is the condition we're in now. This essentially just takes 8 months before the halving, 8 months after the halving, and shades it. And essentially what that does is that's like your accumulation period for Bitcoin getting ready for the next run higher. And it does a good job of basically letting you know that you're in an area where you're buying dips and it's not turning into a bear market. See, some people might look at this and say bear market, right? But what happens on these typically is, and we can just draw just a rough line, but you'll notice when you get a downtrend like that, you get a violent break of it. Okay, so that happened there, that happened here. This one's a lot steeper, but you're gonna look for something like that breaks higher. Now again, we may not see that till we get out to this May area, and then we see that break higher. So it could be that we see something like this. But that's what you're looking for, is this trend line, a steep break of that trend line, and that usually tells you that the consolidation phase that's going into the halving, because there always is one, the consolidation phase is over. And this feels like that's what we're getting into right now, is that consolidation phase. I know December usually is very bullish. If we didn't have the cycle getting so perverted, as you could say, where it went up really high and then pulled back. You know, we're back to where we should be, but if we hadn't jumped up ahead of that, and you can blame it on the plus tokens, Ponzi or whatever, if we were rising into this point, everything would be extremely bullish, and it would be a bullish fourth quarter. Instead, we've pulled back to kind of revert to the mean here on price, so it feels a little more bearish than I think it really is. So anyway, just want to let you know that this thing here is really good at framing things as far as you know, what's fair value at any point in time in the halving cycle, and this is fair value. So I think positioning long here long term, whether it's spot or GBTC, which is the traded fund you can trade, get some exposure in your stock portfolios to Bitcoin. This is a good area to get long, and you know, you can ladder in these spots, but a lot of big returns going into the halving from these areas. So anyway, I just wanted to share that with you. We will look at this actually because there's another component to this indicator that we'll put on the price chart that's pretty eye-opening and a good indicator of bottoms and tops in the Bitcoin market. Okay guys, well that's it for this video. I hope it helps. Please hit like and subscribe. If you're interested in any of our indicators, head over to tradelikeagenius.com. Check out our specials over there. I'll see you in the next video. Take care. Bye-bye.
Trade Genius.